Hey guys, so it is 12:53 a.m. and I have something that I want to talk to you guys about. I'm not too worried about my portfolio. Whoops. I'm not too worried about my portfolio. I am planning to hold my portfolio as a long. You guys know I'm about 25% Amazon, 25% JD. My stocks have been taking a hit. Now, I do have some percentage into ARKK. And that was one of those stocks that I believe that it is aggressive. It's a lot more aggressive than, let's say, something like SPY or something like VTO. I mean, not VTO or one of those other things. But it is a very, very aggressive ETF, and it's built on the idea of investing into innovative stocks. And the whole idea behind ARKK is, you hold for 3 to 5 years, maybe 10 years, and then this stuff will pay off. Now, there is a correction, in my opinion, that's been going on. And because of how ARKK is held up, you can see that a lot of it is with Tesla. You can see 10% Tesla, then you got Roku, you got Square, Baidu, Spotify, Zillow. These are very Tesla, as you guys know, it's been shooting up and it's been going down. So Tesla, if you guys look at the stock price, I'll show it to you guys. It went down 8% today. So it's at $682. You can see in the last 1 month, it hasn't been looking good. 6 months, see, it's retracting back downward. So you have people who are kind of like losing their minds because they're saying like, oh crap, I'm going to lose all my gains. And, it goes back to what it has been, let's see, whopping, where was it, 600? Like late December. Yeah, late December or so. So it maybe wiped out about 3 months of gains. And this has been affecting ARK. Now, what ARK's response to this is when Tesla goes down, she's been buying Tesla. She's buying the dip. Everything has been going on. All the tech's going down. Tesla, Apple, Microsoft, Spotify, just everything. It's kind of been a bloodbath. Now, for a long-term investor, they could say it is like, hey, this is a buying opportunity. We just got to wait for the recovery to kick in. We just have to hold. But then you also have other people who have gotten into ARK probably around the same time I did, which was January, that they are losing their minds. They are saying like, oh, this stock is going down so much. How could it have gone down so much? This is such a piece of crap, blah, blah, blah. And I get it. I get it. If you look at it, you can see the gain of ARK, right? It was kind of like steadily going up, and then it just shot up, and now it's going down. So how far down does this go? Maybe it goes down all the way back to 90 or 80. Who knows? But I hold ARK as a long, and I think to myself, as soon as this thing kind of, everything goes back to how it was, Tesla's going to shoot up, ARK is going to shoot up, and I'm not too worried about it. But I'm not going to lie to you guys, it has been stressing me out because when I hear about people's losses, and then when I hear about like, oh, how could I recommend ARKK because this has been going down so much. This is not one of those investments that you don't have to, that is immune to volatility. This ARK is an ETF that I believe in because I say like, hey, it is moving aggressively. I think that the fact that it's actively managed and it's going with all this stuff fits in line with what I believe in. I am very bold on tech stocks. Now, I can handle the volatility again, but other people can't. They can lose their minds looking at ARK and say like, what the beep is going on over here? This stuff is going down 6% a day, 5% a day. I think it's gone down 21%. And for me, it's like I look at it again, not just ARK. My portfolio itself is down 11%. That doesn't make me too happy, but I think, okay, gotta think long term, right? Can't just think what happened in the last 3 months. I have to think, okay, what do I envision happening for the next couple years? So I think that when people see the volatility and they see the volatility that comes with the tech stock ETF, they freak out. And then they, combined with what's going on about like bonds or interest or whatever, that's all that stuff kind of goes over my head. I'm not gonna lie to you guys. It just creates this whole like feedback loop of ARK is going to go down to maybe $50, or ARK is going to just completely get obliterated. The whole stock market's going to go down. It's going to take 10 years to recover. And I don't feel that way. I really don't feel that way. But hearing and reading this kind of stuff negatively affects me, because it makes me think, crap, did I contribute to this kind of thing? And this is just very, very me being very real. My tolerance for ARC is a lot higher than other people's, right? And it's like, I believe in my stocks. I believe in my Microsoft. I believe in my Apple. I believe that that it is going to go up. Now, the reason why I'm sharing this whole thing is this too. So I came across this article, and it says, how do investors lose money when the stock market crashes? See this? Investors who expect a crash can lose their money if they sell their positions instead of waiting it out to rise. So you will have a bunch of people who solidified their losses because they see ARK, or they see their holdings go down, and even though the fundamentals of these stocks don't change, they're gonna get scared. I expect ARK to go down tomorrow. You can see Asian shares sink lower after the tech pulls the Nasdaq lower. So tomorrow, most likely, it's going to be a bloodbath again. ARK might go down another 5%. However, as I have said before, your portfolio, if you are holding ARK, if you're holding into any stock, you don't have that realized gain until you sell. Like, yeah, it's going to suck if you have, let's say, a portfolio with $10,000, right? Let's say it goes down $2,000, right? You could think like, oh crap, I gotta sell because I lost 20% of my portfolio. But that's not really real until you sell. You get what I'm saying? Like, until you cash out your portfolio just is like a numbers. I don't know if you guys understand what I mean, but like, if you look at like some long time investors, if you look at like Warren Buffett, for instance, there's a thing on YouTube where it talks about Warren Buffett portfolio, I believe from the 90s all the way up to now. You can see that he was holding on to his holdings or just readjusting it. Even when the stock market was crashing, after like 2008 or so. At one point, it looked like he lost about 20-30% of his portfolio, but he never cashed out. He just kind of readjusted, or he just kind of like added some or like subtracted some. But yeah, it wasn't this whole thing about like, yeah, let's get out completely from the stock market. Or if you do a gradual adjustment, I would imagine you go for the ones that are dipping, right? It's the ones that you see like, oh, okay, yeah, this stock, I believe in it long term. It went down 10%. Let me buy it. So that is what Kathy has been doing. She has been buying the dips, and people are criticizing her for this because they're saying, how could you be buying the dip? Well, what is she supposed to do? Sell, liquidate ARK completely and say sayonara, shareholders? Is that how it goes? Because I would say with like an actively managed ETF, you want them to do this kind of stuff. It's either hold, or you just kind of double down and you say, okay, I'm gonna try average down about certain things, and then when the stock market recovers, then you're in a better position. So that's the whole thing about, they say, when others are fearful, buy the dip. Or but it's one thing to hear about it, it's another thing to do it. So I have bought the dip, but it's going down lower, so that's the reason why I'm kind of holding off. I'm thinking like, hey, I don't really want to buy more unless there's recovery, but I'm not going to be liquidating because of this. You guys get what I'm saying? Yeah, I have faith that Kathy's gonna pull through. I'm not worried about it. I do think that this could take longer than I expect. Maybe it's going to take not just a couple weeks, maybe it'll take a couple months, maybe it'll take a year. But again, when I think about the stocks, I think tech sector is really one of the ones that kind of push it forward, right? People think about you can go off onto having some Vanguard fund that gains you maybe 5% a year or so, right? So you would be shielded from a lot of volatility if you go with something like SPY. However, you won't have as much gains. So you look at the gains from SPY over the last year versus ARKK, right? It's like ARKK, yeah, it's hurting right now, but the gains from ARKK is a lot more than SPY. Yeah, stocks always go down faster than they go up, but they always go up more than they go down. Yeah. Which people are calling for a crash rather than a correction. So you got this guy named some Grantham guy. Let me show you this guy. I think his name is Jeffrey Grantham, but I might be remembering it wrong. This guy. Why Grantham says the next crash will rival 1929 to 2000. So this came out a month ago, and Jeremy Grantham. Yeah, so I would recommend watching this. I did see it, and he says it's gonna happen like a couple percent by a couple percent, and he could be considered an oracle of sorts. But I've heard people talk about bubbles happening for a while. I've heard about people saying for the last couple of years, oh, the stock market crash is coming this year, oh, it's coming this year. Again, if you look at a clock, right, you're going to be right. If I give you the time like 6:30, I'm going to be right 2 times in the day. It's just that, you guys get what I'm saying? Like, eventually, yeah, the market is going to crash. But right now, I don't see it as a crash. I see it as a correction. And again, the reason why I say this is because the House is going to be voting on stimulus, I believe, today. And then we're also going to get stimulus money as well, right? So that's going to prop it up. The Fed has been saying that they are committed to help prop up the economy until there's full recovery. And this is going to last, for a couple years. I think they said they don't expect recovery to be for about 3 years. So with all these fail safes, I just kind of think that right now people are kind of getting into this like mass hysteria of like, oh no, it's gonna crash, it's gonna be so bad, you're gonna wake up tomorrow and you're gonna lose everything. And it I like I said, I look at my portfolio. I'm not happy that, I'm losing money. I'm not happy that I'm losing 11% of my portfolio. But again, I'm thinking long term. I have been through this kind of stuff before. I went through March, April 2020, and my portfolio sank down from to the negatives, okay? I mean, not just like cutting into profits. I'm talking about like negative. And you know what? I was okay with it. I was okay with it in the sense that I said, I'm just gonna hold. I'm gonna see what happens. I'm not gonna sell too much. I sold like one holding and that was it. But then I doubled down as well. So that's when I started. When it dipped down in March or April, that's when I decided to put in some money into SPY, QQQ, VTO. I think VTI, DIA, that kind of stuff, and it went up. So it's all about the timing. But could it have gone down a lot lower? Yeah, of course. But I saw the dip and I bought the dip. But I think right now, from what I'm seeing online, and what I'm hearing, is that there's people who are so stuck in a feedback loop. When you have a bunch of like newer investors or people who are paper handing it, they think like, oh crap, I thought I was only seeing gains and now I'm seeing losses. Oh my gosh, I'm a terrible investor. And then you try to talk some sense into saying like it's just the freaking market, and then it can come back and turn into a like, how could you recommend this kind of stuff? How could you recommend ARKK? ARKK went down 21%. It's like, okay, yeah, it went down 20%, but I believe in it long term. You see? So, all the stuff that I tell you guys about the stocks that I believe in and the stocks that I invest in, it's just my personal opinion. I don't know when the next market crash is going to be. I can't predict the stock market. I can only say, these are holdings that I believe in for a long term, and I'm willing to go, ride it out. Now, how long is it going to take to get back to the price that it was 2 weeks ago? I don't know. Maybe I'll take, maybe I'll start recovering later. Maybe I'll start recovering next week. Maybe I'll take 2 months. Maybe I'll take 2 years. But yeah, I don't get shaken out. Yeah. Yeah, so again, for my personal portfolio, I'm not worried about it because even though I'm losing money, I just think, you know what? I'm going to do the Warren Buffett thing. I'm just going to hold. I trust Kathy. I trust Kathy's going to come out of this, fine. And even if it doesn't go out, the way as high as I expect it to in the next, I don't know, couple weeks, couple months, I believe the long term holdings of it. I do believe in Tesla. I do believe that when the market, when people feel comfortable investing, people are going to say, hey, let me invest back into Tesla. Let me invest back into Apple. Let me invest back into Microsoft. I would not bet against tech stocks 100%. I wouldn't do it because I know some people, they might say like, well, maybe it's time for tech to go back to its actual valuation, and maybe, I don't know, maybe someone's going to say, Apple right now is like 129 or so. Maybe the true cost of Apple really should be $40, and I'm not seeing it. Maybe I'm just too much of a bull. Maybe I'm an optimistic bull, but I think, like, yeah, tech stock, people use people put money into tech because they really see it as innovative. So I that's why the money follows into it. People say like, oh, they're coming out with new products, they're coming out with like better and greater things, and people just I try to stick with leaders. So when I do investments, so yeah, I'm not seeing the leaders get kind of shot down just because of, and what are people going to invest in? Am I going to bank that people are just going to be, and institutions are going to be pulling out their money this time around versus in March, April? I'm not going to bet against that. What I learned in March and April is that the institutions aren't going anywhere. And I was reading this one thing about this one company. I forgot which one it was, but they've been around for about 100 years, about 80 to 100 years. And the person in charge had said that they really had they thought, man, should they sell, or should they start really hard liquidating stuff because the economy closed down, right? And they came to the decision that instead of doing that, they should probably double down and buy. And it worked out well for them. They really did. So, yeah. I wouldn't even jump onto GME. I know some people say like, "Oh, Erica, why didn't you sell GME today?" I was, to be honest with you, I wasn't really keeping track of it. And then the other thing too is like GME. I kind of hope it goes up to $300 to $400, just because the people who invested around $400 get to see it go up. But yeah, if I like kind of look at GME, and it serves as one of those like, don't do stupid things, Erica. Don't chase meme stocks. So it's kind of like a bookmark whenever I look in my portfolio. Like, yeah, Erica, you remember when you went into GME? Yeah, not a good idea. Yeah. So I do think I do think the economy is recovering. I heard that, they want to open things back up slowly. Jobs, I think jobs, I've heard different things about the jobs. Of course, a lot of jobs, not a lot of jobs, but some jobs got outsourced, and Some people lost their jobs as a result of outsourcing. That really sucks, right? But I just, as a person who is investing, and I've been investing since like December 2017, I just kind of think like, okay, Erica, why are you investing? You're investing in these holdings because you believe it's going to go up. And I am sticking with that. But I'm not going to lie to you guys, and I'm sharing this with you guys because even though I'm not worried about my own individual holdings, like I said, I'm gonna hold long. I'm planning to hold for like 5-10 years. I think that this is a good time to share that if any of you guys are investing, you will hear people say things, and especially if you recommended them certain things like ARKK, they might say, I bought in, and look at the pick that you gave me. It went down. And I bought in at the all time high kind of thing. And it's just like, yeah, well, just hold. And people don't want to hold. They just think like they see the 6% drop in a day, and then they just don't have any, people don't have any faith in it, because they hear about, they look at Tesla, right, and then they say, well, how come, Tesla must be falling. Yeah, Tesla, if Tesla's dropping so much, then that's it. That's why ARKK is stumbling. But again, I do believe Tesla is going to be around for a long time, and I do believe that when the market recovers, Tesla's going to shoot up. I really do believe that it's not gonna retract all the way down to like $100 or $400. It's not gonna be like, just because of what's going on in the stock market, Tesla becomes a worthless company. You see, like if when the market boosts up again, people are gonna say, man, Tesla's at 682. Buy, buy, buy. See. So yeah, I don't do the whole dip in, dip out thing too much, because I've realized that if I sell a stock, right? If I hold on to a stock, let's say I hold on to, give me a stock. Let's say Microsoft, right? Microsoft, it tanks down 4%. Let's say it goes down 5%, right? And I say, frick, I don't like the market right now. I'm gonna sell Microsoft because I lost, let's say 5%, or let's say I lost 15%, right? And then I sell it, and then after I sell it, I have to, that's when you cement it. You cement the loss. So then you got to write on your taxes, and you basically say, yeah, I'm committed that I do not want Microsoft anymore because I had a 15% loss. Do you really think that Microsoft's going to stay at depressed 15% for the next 10 years? I don't. I see it as it will recover. Now, I know other people will say, well, Erica, this is different. If the stock market crashes, and maybe it's going to crash because of what's going on, you got to get out before you lose everything. It's not going to happen. It really isn't. Like, recovery might take longer than we expect, but it's not like if you invest into the stock market, tomorrow all your money's gone. No, there's going to be so many measures put in place. There's going to be things inside of it, to transition, for volatility until the stock market recovers by itself, or until the economy recovers by itself. That's my true belief into it. So yeah, so it's not mentally healthy for me to hear about this kind of stuff, because like if I had to just think about my own portfolio, I don't worry about it. Again, it's like I hear this stuff and it just rubs off on me, because all this like uncertainty and all this whole thing, like all this like paper hand stuff, it stresses me out. And again, it's not my own portfolio that worries me at all. I'm not worried about my own portfolio, but it's just feeling like like, how would I say this? It's just feeling like your pick is getting blamed for, possibly someone's financial ruin, because ETF holding went down like 20% from the dip. And yeah, so I have always advocated to you guys that if you do invest in anything, try to average down. You know, don't put in all in at one time. You guys have heard me consistently say this. And it's yeah, like always have money on hand so that way you can average down. And right now, I don't feel comfortable averaging down because I don't know how much it's gonna fall. And I did average. I thought I averaged down yesterday, but I didn't expect it to fall down even further. Yeah. No, it's like I don't. When I look at my portfolio, Tim Tam, I'm not worried about it. Like I look at it, and I'm like, okay, I lost 2% more, I lost 5%, whatever. I just kind of like hope that it recovers. But the the depressing thing is that you got more paper hands than you got long term holders, right? So you hear about this kind of stuff, and it just rubs off because it's like, okay, well, yeah, the stock market goes down. Yeah, surprise, surprise, it goes down. So, if anybody cannot handle volatility, um, or drops, I would not recommend getting into the stock market because even if you hold on for 30 years, you're going to have periods of time, just like 2008, that the stock market goes down. And if you believe in your portfolio, then you shouldn't really be too worried about it. And again, let me tell you guys, let me show you this article again. It said that yeah, so see, in the Great Depression, stock prices dropped 10% to their previous highs, and then during the crash in 1987, the market fell more than 20% in one day. Now, the market is in a lot better place than it was in 1987 and 1929, let's be honest here. So, yeah, here we go. So let's say an investor buys 1,000 shares of a company for a total $1,000, then the price drops 75%. As a result, the investor's position falls from 1,000 shares worth $1,000 to 1,000 shares worth $250. In this case, if the investor sells the position, they will incur a net loss of $750. However, if the investor doesn't panic and leaves the money in this investment, there's a good chance they will eventually recoup the loss when the market rebounds. I am this kind of investor. I believe the market will rebound, and I believe in averaging down. However, there is a number of people who will just see it and then they'll just sell their position. And these kind of people, if they sell, they're gonna, I don't want to say permanently, but they can permanently depress their portfolio for a reason. So for instance, right, let's say this. Let's say you have $1,000. No, let's just say you have $10,000, right? You put it all into one stock, it drops down 50%. So you sell it, right? After it drops down 50%, it recovers 25%. But because you sold out, right? You can't you're kind of thinking like, crap. Okay, so I had $10,000, now I only have $5,000, but yeah, because I sold my holding, okay, I need to make back that $10,000. So then you put your $5,000, right? Remember, you originally had $10,000, right? So then you put your $5,000 into another stock. And then what happens? The stock drops down 10%. So then your $5,000 turns into, what was that? $4,000, right? And then you just like constantly lose money because then you're just paper handing it. But if you had just held on to your initial holding, yeah, it could have taken a while, but if you really believe in it, it would have eventually gone back to from 50% drop to maybe 25% drop only, or made backwards recovery. So it is very dangerous, in my opinion, to just paper hand it whenever you have like a stock going down. You see? So that's why I don't try to pull money out too much of a holding, because I know like if I just like pull out prematurely, then I can definitely capitalize. I mean, I can definitely sink in that loss. His initial, I don't know what Roaring Kitty initially did. I do know he was in the negative when he put in like $53,000 into calls, right? And then he was in the negative, and then he kind of lucked out with the whole GME thing. But he held on for like, I think a year, close to a year, you know. So he diamond handed that, and then it paid off. But you know, a lot of people, it's like once they hit a loss, they're gonna think like, oh crap, oh I gotta sell. I lost 10%. I gotta sell now. Shh. And then yeah, that's how you don't make your money back, or that's how you lose it. So for me, when I look at my portfolio, because I think part of it is that you guys know when I invested into JD, right? Shortly after I invested into JD in 2018, the stock dropped by 50%. So I feel like that kind of conditioned me to think like, well, Erica, even if it drops 50%, if you believe in the long term, it's going to recover. And JD did. It went from $47 to $20 to $107, and now I think it's at $92. But yeah, so I have this, I guess that kind of made me a bit more like the diamond hand or tolerant of, holding on to a stock versus other people, if they are newer investors or they're not used to holding on through volatility, they just freak out. Yeah. Yeah, you know what? I would never ever do uh something into like investing college funds into like something like GME. 100%. Like I would, that is way too risky for me. Um, I believe heavily in diversification, and but again, my holdings are basically, oh well, my holdings are heavy on tech for sure. Yeah, that's just gambling right there. That's when, they say like you can't really make much money if you only do small amounts. They say instead of investing $1,000, do $10,000, do $100,000, and then you can make big gains. And that's right. You will make bigger gains if you invest $10,000 versus $1,000. But if it drops, your drop happens a lot more, right? So yeah, you guys, so yeah, so I've been getting crap about my investment strategy, which is holding it, um, I just kind of think like, it's like people can say like, Erica, you don't put much thought into it. All you're doing is just holding it. You're doing nothing. But there's a reason why I'm doing that. It's because, as you guys can see over here, right? It's um, as you guys can see over here, this is the whole strategy. I don't want to like sell my positions and then I I solidify that loss. I'm always going to be very hopeful about the stock market. And I kind of think like, man, if big tech can't make it, then yeah, the stock market really hasn't recovered yet. Yeah, so and like, what would you, if people want to invest, what would they be investing in anyway, right? It would either be the stock market, cryptocurrency, or commodities. Commodities like gold and silver haven't really jumped much, so I feel like the money is either going to be in cryptocurrency or stocks. And cryptocurrency has taken a hit too. So you can't say like pull out all your money from the stock market and go over to crypto. I let's see, what is crypto right now? Crypto is Bitcoin price. Okay, it's at 46,000. See, so Bitcoin is going down too. So it's not like saying, "Oh yeah, screw the stock market, just go into crypto." No, no, no. There's a lot of fear all around, but if you're in the long-term thing, just like I'm going to be in both crypto and stock market, I'm not going to cash out. I'm just going to hold, hold, hold. And I think sometimes, as much as people might think that um I think as much as people might be thinking like it's stupid just to hold on, you guys, if you guys have like looked into like, let me pull this up. Hold on. Ooh, Peter Gotti died. Look at this. So I'm gonna link this in the description too, if you want to click on it. I would recommend watching this because I was actually showing this to a few people, and if you look at it, I'm gonna just fast forward it over here, okay? Look at this. So here, I'm gonna actually, you know what? I'm gonna make it double speed, and then we can watch it together, okay? So this is January 1995. So you see his portfolio is going up, right? And you could think like, oh, okay, Erica, good, good. You know, it's going up. This is how it should be, right? Just going up. But you can see it's been actively managed. You can see things are changing around. Alright, so it looks like good, good, good. He has cash. Okay, okay, okay. And the whole idea with the cash is that if you have cash, you can spend it on more things if you guys see a dip or something like that. See, so he's spending more on, I don't know what the other is. But look, it's starting to go down. See that? See? 2001, remember like the dot-com bubble? Yeah. So did he get out of his stocks? No, look, Coca-Cola has stayed around the same position, for instance, right? He shuffled things around, but he's always been very pro Coca-Cola. So even though he went down from 40K down to 35K, he still didn't say, frick it, let me just cash out, screw it. No, it's just doubling down. It's, you know, so he reduced his position around here. He had more cash. Okay, okay. And then I don't know how it grew. Maybe the stocks went up, but anyway, so you can see the price went up. See, so he's at 66, 67, 69. See, a lot of cash here. A lot of cash, having less. Okay, then it seems like he has less cash now. See, look at this. So he added more investments here. Now, that is when the dot-com crash happened, right? So when, I guess, 2008 is when it kind of went down, right? So instead of keeping on more cash, it seems like he bought more stocks. He kind of used it as a buying spree. And then as the market recovered, right, he has more money. So 134 million, 50 million, you can just see it's going up, 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 up. But it is being actively managed. There's things moving around. Oh, but look, it's going back down. Oh, wait, no, I'm back up. See? And then there comes an apple and stuff like that. So if you have an actively managed portfolio, if you do it yourself or you get into like an ETF or so, you don't really have to do much as long as you trust. And for me, like with ARK, I kind of figure like, hey, you know what? I trust Kathy. I do trust Kathy. Oh, thank you. A long story short, if you like risky investments, check out site FXCM. Let's see this. I don't like going into risky investments that I don't believe in. And I think ARK analyst and Kathy, I think they're very smart. So, Forex. Forex stuff. Yeah, I rather just invest into ARKK and then let the smart people do the work. Yeah, so I mean, like, Warren Buffett didn't get out, and he just had like time in the market, and I think a lot of investors newer investors especially, they see this kind of volatility, and they get into the what appears to be, which is the peak, right? And then let's say they invest over here. I invested around the 145 range, right? So I didn't have too much of a cushion when it was going down, and then I didn't expect it going all the way down to 129. I did not foretell that. Nobody could. But I see it as like, okay, it just retracted all the way back to December levels. Not a big deal. Not a big deal. Sometimes that happens, right? But what if it goes down to like 110, 190? I don't see it going down that low. So yeah, just whatever you invest in. Again, my suggestion is you gotta like believe in your stock. You gotta feel like you think about the long-term viability of it, because in the event that you invest in something stupid, like let's say if I invest in, I don't know, give me a stupid stock. Let's just say Nokia. If Nokia drops 20%, because that's a meme stock, right? I'm not gonna have much confidence in Nokia returning back. We've seen on BlackBerry. BlackBerry was supposed to rip up. Didn't really happen. Did not happen. I mean, BlackBerry's at 1058 right now, so BlackBerry went down 6.54%. And if you look at the chart, it seems like, yeah, it was around 4.5, 7.8, 7.8, and then got the boost from the whole Wall Street bets sort of thing. So now it's at 1058. But if it goes back to 9, I wouldn't really be surprised. I really wouldn't. Yeah, GME is one of those, like, I don't know when it pops and I don't know when it goes down. It's just, we can definitely say though that GME is not worth $100 right now. Right? I think nobody is gonna agree that naturally that price should be $100. What would Mr. Clinton's stock be? I don't know. He'd probably be embezzling something. It'd probably be some kind of, yeah, I don't think he would invest in a stock. I think he'd probably have his own foundation of sorts and embezzle money. Yeah. So that's all. Yeah, so let's see. So I think I'm still going to talk about the stock market. But I just wanted to make this little video for you guys, and if any of you guys are long-term investors, I expect to hear some people talk about the sky is falling, the stock market is crashing, get out before you lose everything. Oh, it's a mistake to invest. I should never invest. Yeah, I timed it wrong. I'm gonna lose everything. And even if you have your faith in your own portfolio, it's gonna rub off on you. Cause I'm just, yeah, I'm just kind of tired of it. I'm just tired of hearing certain things, and I get it. I get it. It's like people have different opinions. I'm always gonna be very pro. I'm always gonna be a bull. I'm always gonna be in favor of tech. But if you are, let's say, a person who, or if you know someone who's a bear, right? Who's pessimistic about the stock market, who's gonna follow that Jeremy Grantham guy, who, it's like, I understand where he's saying it, right? But it's not like if this guy, yeah, see? So he's a long-term investor, he's a legendary investor, so he's been saying that the stock market is gonna crack, and, yeah, signs of the bubble burst with the GME thing. And he says it's always ended very badly. Oh, look at this. Where is it? Yeah, so he's not, he doesn't believe in Bitcoin too. So yeah, he's saying that the stock market bubble is gonna deflate before May, and it's just very, he's pretty much like, I view him as like King Bear. Maybe I shouldn't say it that way, but I'm just like, whenever, like, I've read and I've seen people like link this stuff, and they're like, see, oh, the stock market went down. Jeremy is right. Jeremy is right. And I just, yeah, I don't, I'm not worried about the stock market. Again, what I am more worried about is newer investors, you know, getting, selling everything because it's a combination of fear and fear that the stock market is going to be blown into smithereens. It's not going to recover for the next 10 years. Or they're going to listen to this Jeremy Grantham guy and then say, oh, yeah, see, he's right. He said it was going to go down a couple percent every day, and it is. I got to get out before I lose everything. And it's just, yeah, so, yeah. We will see. We will see what happens. And again, even though I am a bull and I can very much acknowledge that, I would recommend that you guys watch this Why Grantham Says the Next Crash Will Arrive on 1929 or 2000s. And yeah, just say this. So people say, he makes sense, and I agree. I do agree that there is a bubble, but I think that it's important to just kind of say, well, don't let one person's opinion make you think that the whole stock market is going to crumble and it's never going to recover. It is going to recover. It just is going to take time. And stocks, you really shouldn't, unless you're a day trader, you really shouldn't expect to see like quick gains coming in a short period of time without a correction. So for me, again, when I look at my portfolio, I see it pull back. I'm like, okay, not a big deal. Hell, Tesla can't be running up forever and ever and ever. But I do also believe that it's going to go back to where it was. Maybe not tomorrow. Maybe not the day after. But you got to have some sort of risk tolerance. And if you are shaken up so quickly over a drop, and it, like a 20% drop, which is understandable, right? Understandable being shaken out, then you're probably not good being a long-term investor, because in the next 10 years we are going to see more shakeups. We might see something that's really bad, and I just hope that someone isn't like scarred from investing into the stock market, saying like, oh, I remember in 2021 ARK went down 21%, and I cashed in this loss of 21% loss, and I said, screw the stock market. I'm not going to be a sucker for the stock market again. And these people never invest again. They say that the stock market is a scam, and then they influence other people to never invest again because they lost money. But if they just held, then it would have been fine. So yeah, we'll see. So ARKK right now is, let's see, ARKK stock is at 129.51. Let's catch back in a year, and let's see if I remember this, and see how low ARKK goes, right? We'll see. Does the stock market recover? Does ARKK go back to the 155? Does it actually go down to $20? I don't think ARKK is going to go down to $20 anytime soon. If ARKK went down to $20, that means Tesla basically becomes like pennies. not pennies, but it's gonna be a fraction of the price, and you got more. And there's just only so much people are willing to let go. But it is shaking out the new investors. It is shaking out the paper hens, and my belief is that whatever the bottom is, that kind of says like these people are the ones who are holding on, and yeah. So just wanted to share that with you guys, and just look at, when you look at your portfolio, you gotta, do you believe in it? If you believe in it, in my opinion, not financial advice, either hold or double down, and just keep the faith, kind of thing. Again, when it starts recovering, I'm gonna put more money into my portfolio, from things that I freed up, before this dip. So I have money on the sidelines, trying to average down, but yeah, I kind of mismanaged my averaging down because I did not know Tesla was going to go down to 686, so I bought my one extra share at 745. Yeah, not a big deal though. Tesla is going to go up, in my opinion, past the 800s. It'll go up to 900, go up to 1,000, and yeah, long-term holds. Yeah, so it's just tiresome to hear about this stuff, to get some blame about ARKK crashing. It's like I couldn't have predicted ARKK crashing this much, but yeah. You know what though? I just gotta, I know I'm gonna trigger some people, but I gotta leave it up to God. I believe God will pull me through. And this is a test of my faith. And nah, seriously though, that's just making fun. I believe in my stocks long term. I believe in Kathy Wood. I believe in my stock picks, and if I didn't believe in my stock picks, then I would not be investing. And the only one that I'm not too sure and not too confident about is two stocks. One is IPOE, and the other one is GME. But other than that, I believe more strongly in my holdings, and that's why you don't see me touch my main holdings at all. Yeah, so I will talk to you guys later. And again, I know it sounds like I'm married to my stocks, right? For better or for worse, for richer or for poorer, um, through through um, through shakeups and through dips and through peaks and dips, that kind of stuff. Yeah, so it's just been a little tiresome today because it stresses me out to hear all the doom and the gloom and the paper hand stuff, and yeah. But at the end of the day, I do believe in my portfolio, but I wanted to document this stuff to you guys, because if anybody is investing, if anybody is feeling like they made a stupid decision by investing, the market goes up and the market goes down and the market recovers.